How are we doing, everyone? Welcome back to the course. In this chapter, we're going to be talking about fundamental analysis. So fundamentals are the economics, the real world drivers behind currency and commodity market prices. News, politics, and economic events are all fundamental factors that sway different currency and commodities like gold and oil's prices and valuations, These changes in valuations is actually what we're going to be trading to make a profit. So if we can understand the fundamentals, we do have a better understanding of market direction, overall trend, and where we're likely to end up, allowing us to choose logical and profitable and effective trades, more so than if we were to just focus on charts. So fundamentals are the real world economics that lead global currency prices, If we can understand fundamentals and we understand the overall economic backdrop, political environment, then we're going to understand market direction a bit better than if we are just looking mechanically on a chart, If we can understand the reasons behind the chart movement, that gives us quite the boost. So why do fundamentals actually move currencies in the first place? So, of course, when we're trading, we are looking at the charts and we are finding setups inside the chart structure to either buy the currency one way or sell a currency another way, and we are then looking to profit off the raise or decrease in value of one currency or a currency pair as a whole. So the reason that these currency prices even move is based on real world happenings, Things like geopolitical events, things like Brexit, also decisions made by some of the large banks, and also a lot of economic data as well. So how well an economy is actually performing is going to have an effect upon the value of the currency. So the main reason that is because of supply and demand. Investors are always looking for the safest currency to hold their wealth, right? There are a lot of high net worth individuals in the world, and when you are a high net worth individual, you have to look for the safest and most logical places to park your money. Because if a currency that you are holding in is looking weak, this is going to fall against other currencies, and you're actually going to lose quite a large amount of wealth. So these high net worth individuals and investors and hedge funds, managing money for high net worth individuals, are always looking for the safest place and the best value place to park money. So if a currency is looking weak, if an economy is looking weak, the currency is going to lose demand. People are not going to want to hold their money there. If demand falls, they're going to be offloading the currency. Supply is going to rise, and then it is a simple game of supply and demand from there. As supply increases, demand falls. There is more supply to meet the demand, and people are trying to offload it. The demand is not there, so supply rises, and as such, scarcity falls, and price falls with it. So with lower scarcity comes lower prices to match the current demand when the demand has fallen. And fundamentals will consistently cause investors to move their money from place to place. So values are consistently affected by supply and demand as a result of investors looking to hold their currency in the safest locations, be it a currency or a commodity like gold, silver, palladium, or oil. So there are different types of fundamentals. There are microeconomics, which focus on individual market drivers, individual supply and demand, and individual consumer behavior. So these are economics that are not really going to come into too much play inside of our trading. The fundamentals that we'll be focusing on as traders are macroeconomics. Macroeconomics focus on economy as a whole. They focus on the entire economy, including things like inflation, gross domestic product, so how much money a country has, employment rates as well, national debts, etc., things like this. These are the things that sway currencies, So we pretty much ignore the microeconomics, and we instead are going to be focusing on the macroeconomics and the higher impact, all currency, all economy affecting fundamentals. So there are a few different types of macroeconomics that we're going to cover, and we're going to need to understand, inside of our trading strategy. They come with a hierarchy of importance, so I've put them in a triangle here, from top priority to bottom. And what I'm going to do now is just show you the three main types of macroeconomics that we need to understand to trade successfully. So from top to bottom in importance then, macroeconomics for Forex trading goes something like this. At the top, we have central banks. Next up, we have geopolitical events. And at the bottom of the hierarchy, we have economic data. Okay, so central banks refers to the large economic banks around the world that control each country's money supply. Okay, so like the Federal Reserve in the US, for example, the Bank of England in the UK, and the macroeconomics that we're looking for when we refer to central banks are news releases, interest rate choices, monetary policy statements, and all things combined like this. So when it comes to geopoliticals, we're talking more so about real world events like Brexit and recessions and wars, okay, things like this that are going to dampen an economy and affect a currency value one way or the other. At the bottom of the hierarchy, we have economic data, which refers to individual pieces of information from each economy and from each country that sway currency values, okay, and will one way or the other affect the way that a currency trades. The economic data, however, is short-term effect information, things that are not massively going to affect currencies for long term. Okay, economic data generally comes out, has its effect, drives the market one way or the other in a quick spike, and then returns to usual trading within maybe half an hour or an hour. Okay, so economic data, while it will cause spikes and it will cause us some problems while trading, is at the bottom of the hierarchy because it doesn't really have a long-term lasting effect on its own. So those are the hierarchy of importance on the macroeconomic scale. We're going to talk about each of those in the next few videos. I will break them down more in depth. Of course, we're going to have a video for each. So central banks, and then geopolitical events, and then economic data. And then at the end of this chapter, we will tie all of that together, and I'll show you the process on how we can actually use that information in our trading. So some final notes on this fundamental introduction. It's important to remember that the fundamentals, okay, important to understand that they are not the center of our focus. As Forex traders, as technical traders, our strategy will focus primarily on the charts. I'd give it a 80%, 20%, okay? 80% technical and then 20% fundamental, focusing on the economics. It's not something that we're going to entirely place our trades around, and we will keep grounded and we will keep focused on the charts because they can move differently to the fundamentals in the short term. While we're not going to use them at the core focus of our trading, they do provide additional clarity as to the overall direction of a market. So if we're looking to catch a trend, as we always are, if we're looking to trade in line with the trend, we're going to want to understand the fundamentals that are going to be moving the market one way or the other. Fundamentals do come in various different forms with different levels of importance, as we've just spoken about there in the hierarchy, and we'll get onto that more so throughout the rest of the chapter. And finally, and most importantly, really, the reason we use fundamentals is because they can help you trade confidently and logically in line with trend, more so than if you're just looking at candles on a screen, charts on a screen, and trying to decipher from there. So without further ado, we're now going to dive into the central banks video and talk about central banks, okay, which are the arguably most important and most high impact aspect of fundamental trading when it comes to Forex trading and commodity trading. So that's all for now. Thank you for watching. And I will see you in the next video when we really dive into the central banks.